Hello, it's Jack here at System Trader, and in this video I'm going to present you another model portfolio proposed by Rob Arnott. Rob Arnott is the founder and the chief officer of the company called Research Affiliate, the company which is having over $100 billion assets under management, which is pretty huge company. And in this particular portfolio, which is used from the book of Meb Faber, Global Asset Allocation, we are having simple indexes. I'm saying simple indexes, which means cap-weighted indexes, because Rob Arnott is using in his research quite often a different construction for indexes, which are not cap-weighted but are weighted in a different way. But in this particular portfolio, we are still having a classical, let's say, indexes. So let's go into the details and see how it's constructed. So first, let's start with the stocks. We have 10% of S&P 500 biggest American companies. Then we have MSCI EAFE, which is Europe, Australia, Asia, Far East stocks from the developed countries. Then we have the real estate narrate index, REITs, which is also 10%. So in total, let's say we have 30% of stocks. But then on top of it, we have 20% of corporate bonds with the highest credit ranking, AAA, but it's 20%. And then we have, in that particular case, Goldman Sachs Commodity Index, 10%. And then we have bonds, but the bonds, the government bonds. So we have 10% of 30-year government bond. And also we have TIPS, Treasury Inflation Protected Securities, 10%. So all in all, this portfolio is having only 30% in stocks, but still was producing pretty nice outcome in the recent years. So let's go into the details of the results of that portfolio. And just before we will get the results, just small assumption as for the rebalancing. We are doing that only on a monthly basis if needed, and that means that if any of the initial weight here is going up or down by 20%, then if we are checking such portfolio on a monthly basis, we see that that condition was met, then we are doing the rebalancing. And from the 1973 till the end of 2019, the portfolio produced almost 9% per year on average, which if we apply on it, the inflation makes almost 5%, which is pretty nice, especially if we look on the maximum drawdown of the portfolio, because of course the result, I mean, the return is less than what we could get from the S&P 500. But look, the maximum drawdown in that particular portfolio is almost twice smaller than in case of the S&P 500, which is, I think, very important for many investors, because, of course, it would be better in terms of returns to invest fully in S&P 500, but we have to know that from the psychological point of view, it's very difficult to go through the maximum drawdown. So if the portfolio is going down by 50%, also the portfolio is not that volatile as if we would go 100% into S&P 500, because the volatility here on a yearly basis is 8.1%, which is twice less than what we could experience in terms of S&P 500 index. And also if we go to some more details, for example, monthly returns, here we can see each month return and then the year. So even if the year was down, basically these negative results were not that bad. And in worst scenario, in 2008, it was over 13%, which is not that bad if we compare it to what the whole market, stock market, was losing on that year. So basically, this is, let's say, a portfolio pretty conservative, but we have to make sure that we understand that here we have the bonds, like 30-year government bonds, which were having pretty good period in the last 4 decades because the interest rates were going down. But this is not the case anymore, and we have to know that the current bonds will pay not too much because the interest rates are very low. And also, if the interest rates will go up in the future, this is also a problem for this kind of bonds. So we have to make sure that we understand that this is not going to happen exactly the same way what we see in the backtest. Okay, I think that this is pretty much all from my side. I encourage you to just try it and just download my application and see how it works for you. Maybe even construct your own portfolio. Thank you very much for your attention. Bye-bye.